Is this what the beginning of the end looks like? Jordan Alicio writes, boom, we now have modern monetary theory in England. Good read in the Financial Times. I love the extract below. And the Bank of England will directly finance extra spending needs of the UK government on a temporary basis. The government announced on Thursday, allowing the Treasury to bypass the bond market. This is extremely important. This is exactly what happens at the beginning of hyperinflations. What is going on here is the Treasury is going to bypass the bond market by selling treasuries. Normally the Treasury sells and these are British consols, basically. That's the equivalent of a bond in Great Britain. They normally sell them to a primary dealer, which is the big banks and brokerage houses, who then put them on the market. And the central bank, in this case the Bank of England, in the United States it would be the Fed, has to then bid on these bonds along with the public and so on. Now what's happening is that the Treasury is going to sell them directly to the Bank of England. They call this monetizing debt, directly monetizing debt. And this doesn't require a specific bid anymore to compete. So the Treasury can just sell these directly to the Bank of England, and that funds deficits, and this is how hyperinflations begin. But if you notice the next line, wonder if the temporary financing will last as long as Nixon's temporary suspension of convertibility of the US dollar into gold. That was only 49 years ago. Well, no, it won't last that long. If it lasts long at all, it eventually leads into hyperinflation, and it won't take 49 years to get there. So going to our news page, you can see some things like protectionism might break global supply chains, trade set to plunge as COVID-19 pandemic upends global economy, and then expect at least another 6.5 million jobless claims. This was before the jobless claims report came out. It was actually 6.06, so a little bit under what they were expecting here, but it far exceeded the average news media thing, saying it was going to be about 5 million. And so getting right into some of the stories that were posted shortly after this was snapshotted. I'm going to skip the paper IOU prices of gold and silver today, but these are from Zero Hedge, and they were all on our website in one form or another. Fed unveils a new bailout program will provide up to $2.3 trillion in loans to support economy. Now, what's happening here is this article explains how the Treasury is going to supply about $450 billion, and then the Federal Reserve will use fractional reserve lending to create the rest out of thin air. So this $2 trillion CARES program, a lot of this can get leveraged up into many, many trillions of dollars. So that's what this article was about. The next article, free markets are, in my book, I think there was a chapter, Dread the Fed, the Golden Rule is Dead. And that was about when the Fed happened, it ended the classical gold standard, the Golden Rule. And so this one is free markets are dead, blame the Fed. I'm adding that to it. The Fed starts buying junk bonds and junk ETFs. So these ETFs are ETFs of junk bonds. But basically, this article goes on to say that the only assets, this is how it closes, the only assets that the Fed is now not directly buying is stocks. And here too, it's just a matter of time. Another article, a shocking 17 million Americans have filed for unemployment in the past 3 weeks. And this one ends, for every COVID-19 deaths, the U.S. lost 1,132 jobs. So it's a 1,132 to 1 ratio. And so this is just absolutely killing the economy. And here are the jobless claims, and what they've done here, this is from Bloomberg, they've taken the 3-week aggregate of initial jobless claims. So it's a rolling 3-week aggregate. So they're adding up the past 3 weeks. And what you see here is that this is just under 17 million jobless claims in just the past 3 weeks. And when they revise this next week, this week, they revised last week's claims up by an amount that used to be the average total number of jobless claims. So that's how much the error, the margin of error in these claims. So next week's, this will be revised up, and you will see that this was more than 17 million people that have filed in just the last 3 weeks. On the radar, the Spectator Index, the U.S. government debt has just passed $24 trillion. Now, they come out with the report on the Fed every quarter, so it doesn't include some of these programs and stuff. But with what they've approved, I mean, this is going to go past 30. I will bet that this is going to be up closer to double this within a year or so. A year or two, our U.S. government debt is going to probably double because of this. The pandemic, before the end of this year, this will be way over 30. They just passed $2 trillion, and then there's been so many different programs, I can't keep track of it anymore. The number of programs that they keep on releasing and trying to add up what kind of debt this is going to get us all into, I just can't keep track of it. Chart of the day. Take a guess at what this chart is. Look at the spectacular performance of this chart. This is amazing. Guess. Try and guess what this is. This is an amazing chart. Just spectacular performance. And, you can see a little pullback here in the middle of this gigantic bull market. Well, this is from William Middlecoop. Surprised about the bull run in U.S. stocks in recent years? He knows of a better example. And this is the Caracas Stock Exchange of Venezuela. So this is what happens during a hyperinflation. You can see that the stock market started to crash, but as their hyperinflation continued, the stock market melts up. But this is measured in points. It's not measured in purchasing power. I'm certain I'll have to do this in the future sometime or find it. Somebody's divided this by the price of gold in Venezuelan bolivar. When you do that, I'm sure that you're going to see that the value of the stock market is actually falling. Or you take it and compare it to how much real estate you could buy or something like that. But, even real estate, everything in Venezuela is going up in price. Price means nothing. Value is everything. And speaking of value, here is what has happened since the year 2000. This is the U.S. stock market. I've used the Dow Jones Industrial Average here instead of the S&P. If you use the S&P, you come out with some negative numbers. They're numbers that are below zero. They're point something, and people just don't think like that. So I like to use the Dow versus gold so that you don't end up with fractions over here. And when you price the Dow Jones in ounces of gold, what you see is that the Dow set its record in 1999, and it has been falling ever since. The stock market did do this rebound, and gold went into a temporary bear market, a cyclical bear within a secular bull market. The bull market for gold is not dead. It's not over with. And it's been falling. And today, the Dow is down almost 70% from where it was in 1999, meaning gold is up about 220% measured in stocks. Gold has outperformed stocks by that much. I want to welcome the 826 new subscribers. And just remember to click that thumbs up button and share these videos on Facebook and Twitter. Some viewer feedback. When the sticky stuff hits the fan for fiat and gold and silver become highly valued, how long will they be valued? Is there an urgency for buying something that is valuable and measured in the metals, like real estate, before the benefit fades? Or will the value be held for a long period? Well, first of all, gold and silver have held their value for thousands of years. It bounces up and down in a range. We're coming from a low end of the range up toward the high end of the range. But a lot of this depends on whether or not we go back onto some sort of gold standard. If we do, look for a purchasing power that would be measured today in $10,000 an ounce or more, and it'll be sort of a plateau. And then other things, real estate, when it bottoms, it takes a long time for real estate to come back. So will stocks. And so I don't think it'll be like a V-shaped thing where you have to worry about doing it right away. Past performance is no indicator of future realities. History doesn't repeat, but it often rhymes. And you really do need to look at past performance, past history, to try and get an idea of what's going to happen in the future. Because if you account for all of the little twists that are happening right now, and you look at what happened in the past, try and account for those twists, you can get a very good picture of what's going to happen in the future. George Orwell's 1984 is not fiction anymore. It's a history book now. Wouldn't be surprised if the Fed tries to remove paper currency from circulation to mitigate the spread of infection. My producer, Dan Rubach, said, "You watch, this will happen." And that was about 10 years ago. So this is something that, we have known would happen and have sort of been warning about that. But it's the introduction of blockchain technology when the Fed coin comes out, when you've got blockchain, Federal Reserve dollars, that is the moment of enslavement, when all of these central banks start putting, and when we accept them. When they do this, I was just talking with Dan today, it will probably be with something like, okay, here's the new Fed wallet or the new US dollar wallet, and we're going to, for stimulus, we're going to give everybody $5,000, just download this wallet. And that's how you get everybody to start using this national digital blockchain currency where they can track everything that you do. Churchill once said, "I contend that for a nation to try to tax itself into prosperity is like a man standing in a bucket and trying to lift himself up by the handle." Well, modern monetary theory is like a man adrift in the ocean trying to save himself from drowning by sucking the air out of the raft. I could not agree more. The meme of the day, but make sure you get my book, share these videos. And I do want to say, we came up with this meme, at Gold Silver, and it was based off of a tweet that Mark from Incrementum AG made. And this is a non-political meme. You can put the face of any president on top of Donald Trump here. It's non-political because every administration increases the national debt, and it's going to go up huge this time, so it doesn't matter what president you're talking about. But I think this is hilarious. I flattened the debt curve. And here's the chart, Mr. President. You're holding it sideways. And, this is something that won't flatten until the dollar is dead. Thank you very much for listening. We'll see you next time.